Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets.
Euro-dollar. An indecisive spinning top on Friday after the previous sessions combined bearish open and close black mirror bozo and bearish engulfing pattern. The market was halted in its decline by the combination of basically all the moving averages, which range from 108.75 down to 108.38, plus the 50% Fibonacci line for 2023 at 108.64. Overhead, we have the important 50% Fibonacci line for January 2021 to September 2022 move at 109.44. This had been a good capping resistance in recent days. A second thing to note is that I had previously set out a target X at 109.85. This was the secondary harder to reach target for the small broken mid-January, late February bearish expanding wedge pattern. The high late last week was at 109.880, which, well, not last week, the week before actually, was which has target X just about reached. Further overhead, we have the broken green highlighted lower bull channel line, currently 109.99. And that's the October 2023 to late January 2024 bull channel. This has also acted as an overhead capping action. I'm still wondering if the market will now trawl along the underside of this lower bull channel line further. Meanwhile below, well, we have congestion below, but nothing to write home about until the May 2023 low at 107.66 and the more important April 2023 low at 107.25. So far today, a small so far reactionary move back up, edging out of the top of last Friday's range. Cable, aka sterling against the US dollar. A small indecisive spinning top on Friday, but it did make a fresh low for the week, if just barely. Prices continue to be nicely captured within a space created by the overhead dark blue highlighted middle time, currently at 128.23, of the broken November-December 2023 shallowly bullish shift pitch hawk, and below by the previously mentioned general congestion now support formed between December 2023 to January 2024 from the 126 area up to about 127.75. Within this congestion also sits the lower time, currently at 126.93, reinforced by the short-medium moving average, currently 126.86. Further overhead, we have the November 2020 low at 128.52, and a declining, bright red highlighted, July-to-date downtrend, currently at 128.53. This downtrend is still the one to watch. Meanwhile, further down, we have the February-based uptrend, currently at 126.44, and the parallel medium moving average, currently 126.23. So far today, a very limited action, a little lower open and a test down to the lower Friday, but a seeming rejection of it, though not enough to move to the top side of Friday's range. Not yet, at least. Euro sterling. An immediate countering bullish army after the previous session's key reversal down, if only just. The finish ended up with an interesting close, back up just over the combined December 2022 and 2023 lows at 85.45 and 85.47 respectively. The top side was capped, unsurprisingly, by the oft-mentioned declining short-medium moving average, currently 85.56, though this dynamic resistance is now right close. We still have further recent congestion running up as far as about 85.75, but continuing to keep an eye on that short medium moving average. Its capping influence has been here, well, since mid-February. Overall, the market is still within the breach but not broken, purple highlighted late January, small expanding wedge pattern, currently 85.26 to 86.11. In the recent process of moving higher, the market left behind a similar pipe bottom in March to the one seen in mid-February, leading to speculation we might have a larger double bottom pattern formed with these two pipe bottoms. More on this should it develop. A little further down we have the support of the dark blue middle time, currently at 85.11 of November to December 2023 bearish shift pitch hook. A little lower is the bright red neckline of the May to August 2022 head and shoulders continuation pattern, currently 84.99. This is a further significant support. Now overhead, beyond the short medium moving average and the recent congestion running up as far as about 85.75, well, we seemingly have little until what looks like a heavy duty congestion formed from the crossover of the upper trend line, currently at 86.11, of the purple highlighted expanding wedge pattern, the dark blue upper time, currently 86.08, and the recent dead cross of the medium moving average, currently 86.04, down through the long moving average, currently 86.07. Just quite an area around there. So far today, a follow-on higher to last Friday's bullish army, testing the overhead declining short medium moving average resistance. US dollar against the Japanese yen. A fourth bullish white soldier on Friday and a nice follow-on higher to the previous session's bullish closing white Mariposa. Now the base of the action was on the rising short medium moving average, currently 148.19, whilst the top side was capped somewhat surprisingly by the slowly declining short moving average, currently 149.27. This is all a follow-on from the early last week, late previous week's 3-day bullish morning star pattern. So it's that base we saw only a few days ago. Looking below, we have the support from the combination of the lesser Fibonacci line at 146.33 and the slowly rising long moving average, currently 146.49, as well as closer in from the flatlining medium moving average, currently 147.88. The top side, we have congestion from late February between approximately 150 to 150 and 3/4. Overall prices are still within two major pitchfork patterns. We have the February 2022 to January 2023 bullish shift pitchfork, highlighted in purple on my daily chart. We're in between the lower time below, which is currently at 144.16, and the middle time above, currently 158.24. We're also in between the middle time above, currently at 152.44, and the lower time below, currently at 145.16 of the July to December 2023 bullish Andrews pitchfork, which is highlighted in bright red on my daily chart. So far today, a small further attempt high, but barely overcoming the short moving average at this moment. US dollar against the CNH, the offshore Chinese yuan. A fourth bullish white soldier on Friday, with the whole of last week looking like it has elements of an advanced block pattern. It was nevertheless another move closer to the lower uptrend, currently at 721.37 of the dark blue highlighted mid-January to date ascending triangle pattern, currently 721.37 to 723.59. Now last week I laid out some ideas for potentials below for breaking out such an ascending triangle pattern. Thus primary target X is down in the 716.05 zone, with a secondary harder to reach target X1 down in the 710.70 zone. The opportunities lower are gradually diminishing as we now have all but the long moving average as support below, as well as the May 2020 high at 719.64 and the late February low at 717.97, which is just above some recent congestion between approximately 714 to 716. Meanwhile, the top side has had a lot of resistance in the way, though prices have waded up through that, and the only one left of note before the dark blue highlighted uptrend is the mid-February to date downtrend, currently at 720.85, which is being tested right now. So far today, as I said, an attempt to test the overhead mid-February to date downtrend above the dark blue uptrend, broken uptrend. We have the location, the flatlining long location, which is currently the long moving average location, which is currently at 722.72. US dollar against the Mexican peso. An indecisive doji cross on Friday after the previous session's immediate countering bullish harami. There could also be a possible indecisive spinning top. Overhead is the neckline extension of the February to April 2021 head and shoulders top, currently at 1679.23, whilst below the 2023 low, we have that at 1662.11. Further up, there is the combination of the highlighted in dark blue middle time, currently at 1688.98 of the December 23 to January 2024 mildly bearish shift pitch hook, as well, and more importantly, I suspect, the support now turned resistance at 1688.97. This congestion at 1688.97 was formed in mid-December 2015 and more recently featured in mid-August and late December last year, so it has some pedigree. We also have some congestion between 1670 even and 1680 even from August last year, as well as the 2023 low at 1662.06 before we can start looking at the blue highlighted lower time currently at 1655.67. So far today, a small move higher, though it seems more to be a seeming reluctance to test down to the 2023 low at 1662.06, but also a reluctance to recover higher as well.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.